Hey everybody, thanks for watching my site. This is the first video out of two, and I wanted to talk about some things. First of all, a little problem I've noticed on the original charts I've been showing you here. Okay, here's the problem in a nutshell. Right here, the price for the 180 option is 40 cents, 47 cents. Okay, right here, the price for the 180 option is 47 cents also, all the way down this line, and you would think it'd be more expensive. But once again, the problem is the erosion factor of options because of time. Now, if you'd got in here, it'd be 47 cents, about right here. But guess what happened when it got to here? When there was a big drop here earlier last week, all of a sudden, this option went from 47 cents to almost $4. There was like a 600% increase. Okay, and then as it went back and calmed down, it was back to 47 cents. So this tells me that options are pulsatile. They pulse, okay, with time, especially if there's like a sudden big move. And the question is how to find this, because this big red arrow suddenly showed up at about 1 p.m. in the afternoon. Okay, it was in the middle of the day. There was no indication that something like this was going to happen. Here, the Nasdaq is just cruising around during the middle of the day. It's slowly rising. All of a sudden, panic. It just drops huge. Okay, and that's where you would have made your money. Now, I sat there and looked at this for about 2 weeks, trying to figure out how I can predict that, because it seemingly appeared out of nowhere. And then I found what I think is the answer. Let me show you here. Alright, let me go. There's a site called Stock Charts. Type that in. Alright. Stockcharts.com. And when you go to that site, this is what you get. And what you do is, let's let this load. What you do is you enter a symbol name. In this case, we're looking to see what the market's going to do. So we type in QQQ. Alright. And then what we do is we go down here. There's an indicators section. There's like 3 indicators that are overlaid on this. You could see 1, 2, and then there's like a 200-day and a 50-day moving average. So we go down here, and we'll just, in the none one, we'll just open up this indicator. Okay, Stochastics RSI. So we click that. Now, remember what I said, also you have to hit update right there. Where I said we couldn't, since it was pulsatile in nature, we need to find out what point is it most likely to pulse up or down where there's a big move, because that's where you make the money with your options. Now, check this out. When we have, there was another thing you needed to do was put in a special K. So let's go back to that. Let's just lose this one. Alright, Pring special K. So we'll hit that, we'll update it. Alright. This doesn't work when the line is below the red line, because then there's some weird thing happening. There was a crash here. Okay, basically this is when the coronavirus came out and the market crashed. So when it goes below the red line, you're in a special situation. Just go with the direction and just stick with it. Okay. But when it's above this line, which is most of the time, this is how you play this. When it comes into overbought territory, alright, that's when you want to, when it just comes in, that's when you want to put puts out there. And then the market will usually go down significantly. When it comes down to this area under here where it gets colored a little bit here, that's when you want to purchase calls, and then it goes on up, and as soon as it leaves this area, it starts going up. You could sell them. Okay, and then once again, you see the overbought area, and that's when some event happens and the market drops. Okay, every time, now not every time this happens, so you might want to have 2 or 3 piles in case there's a failure. So right up here you could see the market cap climbing, so then you would use a new pile here, and then boom, there was that event. For whatever the event was, It's almost like the tail wagging the dog. So when when indicators are saying something's like way overbought, so it's too high, there's usually some kind of news that trigger people to all of a sudden just to blow off steam and it sells. Okay, so then down here, same thing, it goes up, and then right up here, remember that event last week, 600% gain on the puts. So you're already positioned because you were in this area, and you already had some puts bought, and you were just waiting for it, and boom, there it is. So this is part one, and I will be wrapping this all up in part two. Thanks for listening.